Hello and welcome. You're watching Market Cafe with me, Ankita Saxena, and with me is my co-anchor Snehi Shah. Now, this is the show where we take you through the headlines that made news on the global front and in the domestic arena, and we also tell you the market movers and the trade setup for today's trading session. But first up, we'll take you through how the global markets fared last night. So Snehi, Wall Street is going to end the week with losses. There were sharp cuts coming in yesterday as well because, the rate hike plague is back plaguing the Wall Street because the job data has come in robust, and that is something that has been worrying the Fed for quite a while right now, right?
Right. So, good morning Ankita and good morning to all our viewers. Let me quickly take you through what the global handover looked like, and let's start with the US markets. And as Ankita mentioned, stock futures were little changed Thursday evening as investors refocused their attention on the upcoming June payrolls report and the implication for the Federal Reserve's policy stance. Futures tied to the Dow Jones Industrial Average as well as the S&P 500 were trading flat, and Nasdaq 100 futures also slipped very nominally. After us action, Levi Strauss shares tumbled 6% as the denim giant cut its profit outlook for the year. But this week's main event for economic data looms ahead, and the Labour Department's June payrolls report, which is due Friday morning, will be coming out. And economists polled by Dow Jones anticipate an increase of 240,000 positions, which is a major cool down from May's gains of 339,000 jobs. So the three major averages are also on their way to a losing week then overall, and the S&P 500 is off by almost 1%, while the Nasdaq is on the pace for a decline of 0.8%. But the Dow is the underperformer of all of these three indices. It's tracking a loss of 1.4%. So that's a major downtick coming in for the Dow when you look at it on an overall weekly basis. But that's what the US markets look like largely. Now let's shift focus to the European markets then. And European stock markets fell sharply on Thursday as well as traders digested new economic data from the US. The Pan-European Stock 600 index closed down 2.5%. All sectors and major bourses finished in the red. Travel and leisure led losses with a 4% drop, followed by retail stocks which were down 3.7%. Largely a negative handover coming in globally from Europe as well as the US. Let's see how that pans out for our market this morning. But Ankita, this is what the global markets did. Why don't you take us through what oil and crude and other commodities did?
Correct. So oil was trading absolutely flat yesterday because the markets weighed the tighter US crude supplies with the higher likelihood of a US interest rate hike. As I mentioned, that could perhaps dent the energy demand. Now Brent crude currently is at $76.49 a barrel, whereas the WTI is trading at $71.81 a barrel.
Alright, and with that, let me also take you through all the cues you should be keeping on your radar today globally as well as domestically. As I mentioned, the US unemployment rate numbers will be coming out today, so keep an eye out on that. On the corporate action front for our markets, you've got Suzlon Energy, which will mull capital raising today. You've got Indian Oil, which will also be mulling the raising of capital via rights issue today. And for LTI Mindtree, today is the last day to buy that stock to be eligible for dividends. Now, on the annual general meeting front, you've got Bank of Baroda as well as Indian Overseas Banks that will be having their AGMs today. And on cues of other events today, you've got the Jiobharat phone sale that will begin in India today. The beta trials will also begin for Jiobharat V2 phone today. And on a lighter note, today is also World Chocolate Day, so indulge in some sweetness as we have a weekend ahead of us.
All right, Chocolate Day, that is today. Good weekend ahead of us. But the important news that came in for US is a bit of a dampener on the US markets, of course. On the most important data from the US came in last night. The companies created far more jobs than expected. Payroll processing firm ADP reported. Private sector jobs surged by 497,000 for the month, much higher than 220,000, the Dow Jones consensus estimate. The increase resulted in the biggest monthly rise since July 2022. This is once again stoking fears of interest rate hikes from the Fed. However, the street will be awaiting the more stable and official data from the US Labor Department. The economists expect growth to cool in jobs to cool down from May.
And on to some cues from central bank officials then, and Fed Chair Jerome Powell said in a statement that they cannot say that the crisis is over even though things have settled down quite a bit. But he added that the US banks remained resilient otherwise, and meanwhile, Atlanta Fed President and CEO Rafael Bostic sounds of caution. He says that inflation could persist longer and policy measures should work out in the long run.
And Amazon gears up to enter the AI race. CEO Andy Jassy says they will invest big in artificial intelligence, which will have the potential to improve virtual experience of its customers. He specifically pointed to Amazon Web Services as one of the prominent businesses that can capitalize on AI for a long term. He believes he has an edge in AI through its custom chips and services target for developers of large language models.
And US Treasury Secretary Janet Yellen has kicked off her 4-day tour in China as a mission to deepen ties between the two countries. This comes in after weeks after Secretary of State Antony Blinken's visit to Beijing last month, which was the first high-level meeting between the two countries after months of tensions. US and China are trying to find a strategic space for both sides to operate.
And after the newly launched Threads platform, Twitter has threatened to sue Meta Platforms in a letter sent to Meta CEO Mark Zuckerberg. The letter from Elon Musk attorney Alex Spiro alleged that Meta's new Twitter clone was built by former Twitter employee deliberately assigned to develop a copycat app. Meta responded to the allegations saying no one on the Threads engineering team is a former Twitter employee.
And Samsung reports its worst decline in quarterly revenue since 2009 after uncertainty over a year-long electronics and memory chip demand slump. Remember, the company has borne the brunt of a slowdown gripping the $160 billion global memory industry. Inflation and recession fears last year triggered a rapid pullback on consumer and business spending that has hammered sales of electronics worldwide.
And well, the great Indian thali got more expensive. Even though the economic data showed inflation was cooling down during May, it seems to be boring a hole through the pockets of the consumers. India's spice prices are heating up. In fact, in just the past month, turmeric prices were up 24% and coriander was up 15%. And this on the back of lack of supply, competitive pricing and weak sowing. And my colleague Aishwarya Patil filed the ground report from the APMC Mandi, Mumbai, and here's the report.
Well, the Great Indian Gravy or the Indian Thali is all about to get expensive. It's been an El Nino year in various places, especially tomato-producing places and other vegetable-producing places have been affected due to untimely rains as well as delayed monsoon and a heat wave across the country. At this point, we are seeing inflation, which is ubiquitous across the board in terms of vegetables as well as spices. Let's take a look at the Kashmiri chili, which is right now at anywhere between 500 to 700 rupees per kg, as compared to a year ago, which was around 300 to 500 rupees a kg. When we take a look at cumin prices, that has also shot up. That is topping the list at 800 rupees per kg in the retail market. But at this point, in the wholesale market, it's anywhere between 550 to 680 rupees per kg.
If you see overall, since last year, the prices of spices, the garam masalas, have almost gone up by 70 to 80% from last year to this year. Most of them are imported also, and the prices have gone up there, so effectively it has gone up here also. The best example of this is, I would say, is watermelon seeds. The government has just now, some time back, allowed to import this thing, seeds. And as a trader, I feel is that you temporarily at least reduce the taxes and the excise duties and all, so as to reduce a price. And then you'll have to just keep your fingers crossed and wish that the weather remains fine, considering the El Nino effect also that is going to come up for the next year.
If, the producing areas don't see enough rainfall and things don't materialize in these producing areas, turmeric producing areas, especially in Maharashtra as well as Andhra Pradesh, the prices are all set to spike going forward.
All right, so but what does the global spice market look like and where does India stand amid all of this? My colleague Lisa joins us to break it down for you.
Well, household budget is going for the toss as the prices of spices, they have been increasing, and that is causing the common man to start sweating. The prices of essential spices of cumin, turmeric as well as chili, they have reached their record levels in 2023, and that is because of unseasonal rainfall seen in various parts of the country. But let's look at some interesting exports data of India. Firstly, India is the second largest exporter of spices in the world with a share of 16%, and that is because China is the largest exporter of spices with 22% share. And if we look at the major importers of Indian spices during 2023, it was China with a 20% share, USA with a 14% share, Bangladesh with a 7% share, followed by UAE with a 6% share. And if we look at the trend of exports also, that has increased substantially. The value of exports has risen to 31,700 crore in 2023 versus 9,700 crore way back in 2011. Even the volumes have increased substantially. Now, if we look at the major exporters to the spice exports basket in terms of value, it comprises those spices which has risen. Chili has it has around 33% share in the basket. Cumin has 13% share, while turmeric has 5% share. The government has done a lot to increase the exports. They have set up export development and promotion of spices and also spice parks for the processing. Now, looking ahead, the future of these spice prices, that looks a bit uncertain, because what will influence it going forward is the weather pattern and also geopolitical developments. But for now, we can safely say that these common staples have now become precious commodities.
Well, clearly the staples have become a precious commodity indeed. And moving on then, well, is India really looking at purchasing Rafale fighters for the aircraft carrier INS Vikrant? Well, remember, the Prime Minister is set to visit France next week, and a crucial meeting on defence procurement is on the cards. My colleague Shinjoy has the details.
Big moment for the armed forces. Tomorrow there is a DPB, a Defence Procurement Board meeting at 4 o'clock, chaired by Giridhar Aramane, the Defence Secretary. And the big thing on the agenda is the Rafale. The Navy wants the Rafale, and the Navy wants the Rafale perhaps 26 to 28 for the INS Vikrant, the new aircraft carrier. So the DPB meeting is the first step. Once the DPB clears this proposal, then it goes to the DSC, which is headed by the Defence Minister and includes the three chiefs and the CDS and the DRDO chief. And after that, an announcement can be made, perhaps when Prime Minister Modi is in Paris for the Bastille Day on the 14th of July. But before that, it has to clear the DPB, it has to clear the DSC, and then, of course, any announcement can be made. So the first step is really tomorrow, and we will know tomorrow whether there will be a second step. There should be. And after that, of course, is the DSC sometime next week. Apart from the Defence Secretary, the others in the meeting will be the three Vice Chiefs of the Army, Navy and Air Force, and of course the DRDO. So a big moment for the Navy, for the armed forces, tomorrow at the DPB.
All right, thanks Shinjoy for all those details. But with that, let's quickly slip into a short break. Don't go anywhere. More news and updates on the other side.
Back here watching Market Cafe, and it is that time of the show where we go domestic, and for that we need to take a check of the Asian markets. The Asian markets have opened up, and I see a sea of red cuts coming across all Asian markets, and of course that was the probability given the sell-off that we saw on Wall Street yesterday. And this is going to be the second day of the markets ending the day in the red. That there is a chance that the markets might end the day in the red for Asia Pacific as well. Also, let's quickly go across and markets. We all remember that Janet Yellen is traveling to China to thaw the relationships between US and China, and currently Shanghai is down 0.4%, down 14 points, and Kospi right now is also in the red. So is Hang Seng. It's down almost 1%. A sea of red, cuts coming in, strong cuts coming in the Asian markets as well. Kospi is also down 1.4%, almost 1.5% down. We also have Japan's Nikkei. That's ASX down 1.7%, more than 1.5%. Nikkei is also down more than 0.5% in trade right now. Sea of red, the cuts coming across, and we'll also quickly mark the GIFT Nifty. Can we have that on screen as well? GIFT Nifty is also down 0.3%, down 60 points. It is hinting towards a rather negative start for the Indian markets as well.
Good morning and welcome back, and thanks for staying tuned to Market Cafe. This is ET Now. Let's move on with the show then, and Reliance Industries will be in focus in today's trading session as the NCLT has approved the demerger of the financial services business. Somit is here with more details. Somit?
The much awaited demerger of Jio Financial Service has been finally approved by the NCLT. Now, two more approvals are pending, that is from RBI and IRDAI. Now, the street is expecting that the record date for this demerger could be anywhere between July and August, and they're expecting the stock or the demerged entity to list on the exchanges by September. Now, the share ratio is 1:1, which means that for every one share of Reliance Industries, the shareholders will get one share of this demerged entity, that is Jio Financial Services. And the chairman and CEO of this demerged entity are both ex-ICICI veterans. It's Kivi Kamath, who's the chairman, and Hitesh Sethia, who's the CEO of this demerged entity. Now, what will the financial service do over the next 3 years? They will provide lending services to merchants and consumers. They'll expand in other verticals like insurance, payment, digital broking and asset management, and they will also build a large digital fintech platform for all Indians, and they can partner with various strategic and financial investors going ahead. Now, on the valuation front, if you see, the financial service arm will own close to 6.1% a stake in Reliance Industries, that is the treasury shares of Reliance Industries, which is valued at close to 1.1 lakh crore rupees, while the net worth of this demerged entity would stand at around 28,000 crore rupees. So, as per our calculation, the book value of this entity could be around 200 rupees per share. However, the analysts are valued at a different price. JP Morgan has assigned a value of close to 189 rupees per share, while Jefferies has assigned a value of close to 179. Now, with whom will this financial service unit compete with? Well, it will compete with Bajaj Finance, Paytm, PB Fintech, Angel One, IFL Securities, and many other unlisted players as well. And this company on listing, if you see, would be the fourth largest financial institution based on net worth, ahead of Axis Bank and Kotak Mahindra Bank. The company's net worth is expected to be close to 1.4 lakh crore rupees. And how will Jio Financials benefit going forward? Now, it is likely to have a AAA rating similar to its parent company, that is Reliance Industries, which could lead to lower cost of funding for the company. And only 6 large NBFCs at this moment have a AAA rating. So this is definitely going to benefit Jio Financial, and also the large distribution footprint of Reliance Industries will also benefit Jio Financial, given the fact that Reliance Retail has more than 18,000 stores in India. It has close to 78 crore footfall on an annual basis, and also Reliance Industries telecom arm has 43 crore telecom users. So these could lead to higher distribution for Jio Financial Service going forward.
Right, and thank you so much for that, Somit. But the FII flows are still positive. They remain net positive for the 6th straight fortnight in the second half of June. Now, which sectors saw the most inflows and outflows? Somit, you have all the details. So take our viewers through all those details.
Well, on the FII front, if you see, it is the 6th consecutive inflow that we are seeing on a fortnight basis, and it stands at around $4.15 billion US. And the total inflow that we have seen so far in 2023, that is the first half of calendar year 2023, it stands at close to 9.26 billion. Now, the largest inflow was seen in the financial service sector, and during the first half, the financial has received nearly 37% of the total inflow that has come in the equity markets. Now, though the sector has a weightage of around 33.7% when it comes to the FII basket, the ownership has actually declined compared to the average levels that we have seen since January 2020. Now, capital goods is the sector that has seen the second highest inflow in the first half of calendar year 2023, and FII weightage has increased to around 5.4% from 4.4% that we had seen in the start of this calendar year. Auto sector has also been among the FII favorites, and FII ownership in the auto sector is at a 3.5-year high of close to 6.5%. On the outflow side, it's the software and services and media and entertainment that has seen an outflow for the 4th straight fortnight. And lastly, some trend reversal trends that we are seeing. Firstly, in the services sector, which includes includes port, logistic, aviation, manpower. Some outflows were seen, and this marks a reversal in the buying trend that we had observed over the last 4 months, and the highest sell-off we have seen in the fortnight that is in the second half of June in the last 15 months. However, the ownership in the sector stands at around 1.8%, which is still at its 3.5-year average. On the other hand, consumer durable sector, which has seen some weak inflows. In fact, it was continuously seeing outflows for the past 8 months. Now this has changed over the last 2 months, and we are seeing fresh buying interest in the consumer durable sector. In the month of May, there was buying of around $129 million, and in the month of June, there was buying of close to $497 million for consumer durables.
All right, thanks Amit for all those details on the FII flows for the second half of June. But let's move on then and shift focus to aviation and relief coming in for Go First, as the airline is likely to secure the nod from the Directorate General of Civil Aviation for resumption of flights. The Go First resolution professional has informed the National Company Law Tribunal that it expects the nod to come from the Indian aviation regulator in 2 days.
And well, the Finance Minister Nirmala Sitharaman today met the heads of public sector banks to review the sector's performance. FM Sitharaman also directed the banks to improve the implementation of government's flagship schemes such as Atal Pension and the Mudra Yojana. Prakash Priyadarshi joins in more details on this. Take it away, Prakash.
Yeah, the Finance Ministry has come out with the details on the meeting with the heads of the public sector banks that was chaired by the Finance Minister. Ministry has informed that it was an overall performance review meeting of the public sector banks based on different financial parameters that include credit deployment, profitability, asset quality and capital adequacy of the public sector banks. And the major financial parameters indicate that the health of the public sector banks have significantly improved. Some presentation was also made before the Finance Minister, and bankers have informed that they are able to handle macroeconomic shocks due to strong health of the public sector banks. Other than that, Finance Ministry has also informed that the FMO will chair review meeting on functioning of the regional rural banks in different parts of the country during month of July and August. Coming back to the financial health of the public sector banks, as per the Finance Ministry's assessment, PSBs are adequately capitalized, resilient and strong financial health at this point of time. In fact, PSBs have earned net profit of approximately rupees 1,05,000 crore during financial year 2023. Therefore, PSBs are well positioned to meet any credit demand in the country, including productive sectors. FM has asked banks to continue focusing on priority sector lending and ensure an increase in rural agriculture and sectoral credit to meet the priority sector lending norms. When it comes to regulatory framework, as per the Finance Ministry, FM has asked public sector banks to follow regulatory framework by focusing on a risk management system. Banks were also told to ensure fair and transparent recognition of NPAs and address associated business model risk with by following robust risk management practices. Last but not the least, Finance Minister has also urged public sector banks to take necessary steps to improve deposits, including customer services.
All right, thanks Prakash for all these details on the meeting that took place yesterday. But let's move on then and on to the stalled Zee-Sony merger. The National Company Law Tribunal heard the Zee-Sony merger case, where Puneet Goenka's counsel said the merger cannot be stalled despite the unfavorable order. They also said that the merger will take place even if Goenka cannot continue to be MD. Now, the tribunal has adjourned the case until July 10th, and Ankur Mishra joins in with the details on this. Ankur?
Yes, arguments continued at NCLT regarding the Zee and Sony merger, and on behalf of Puneet Goenka, the council had argued that the creditors should not have any problem with the merger, and the merged entity which is going to be much larger in size, which is going to benefit the shareholders as well as creditors. He also argued that even if we consider the scenario where Securities Appellate Tribunal an unfavorable order regarding Puneet Goenka as well as Subhash Chandra, there should not be any problem with the merger because it is shareholders who are commanding the deal. End of the day, even if there is a siphoning in the company, he argued that the shareholders can vote the management out, and that power is very well within the hands of shareholders. Therefore, the creditors will not have any problem. And on the likes of Axis Finance, IndusInd, and also JC Flowers, which had objected regarding the Zee-Sony merger, the counsel of Puneet Goenka had argued in the court that they are not even the creditors of the company. However, on the other side, Axis Finance counsel raised the questions regarding the non-compete fees being paid in the Mauritius and why the SL Group companies are not paying up the creditors. So all these arguments continued in the court, but all eyes will be there on the SAT, whether or not the reserved order is passed. And also NCLT, which is going to hear the matter again on July 10.
And well, with that, it's time for us to slip into a short break. You don't go anywhere. After the break, we go stock specific.
Welcome back and thanks for staying tuned to Market Cafe. This is ET Now. Let me take it across to Harsh, who's joined us this morning, and he's going to take you through a list of all the stocks that you should be keeping out on your radar today. Harsh, good morning. Take it away.
Good morning, Snehi. So yes, first off, we have Zen Technologies secured a major order, suggests that they'll continue to secure orders from the government. We have also Bajaj Finserv's numbers coming out for the month of June, as well as the Q1 update from Bajaj Finserv on the insurance side of things. IHCL sees good growth momentum with regard to new hotel signings. We are also seeing the likes of an NTPC, which has opened up its unit 2, which is 660 megawatts of capacity at the Bar Super Thermal power project in the state of Bihar. We have IOCL as well as Praj. They have set up a JV for building biofuel production capacities in India. Intellect Design Arena will also remain in focus on the back of the fact that it has lost an order between GEM and itself, which was supposed to be renewed. The orders, roughly contribute around 250 crore in terms of revenue in FY23, but had a very, very low margin, 11.5 crore odd margin, and they believe that the second bidder was 16% lower in terms of cost, and therefore they've allowed the order to go. Also, the likes of Havells may also be in focus on the back of rating. Goldiam International as well as Ensar Technologies on the back of record date for buyback and dividend respectively. We have the likes of a Suntech, IIFL Finance and Eris on the back of block deals, and we also have a whole host of companies going ex-dividend today, so keep your eye out on all of those. Those will also be in focus. Of course, this is outside the universe giving out Q1 updates. You have the likes of a Titan, a Dabur, all of which have come out with their Q1 updates as well.
That's right, Harsh. Q1 updates pouring in there as we get into the earnings season next week. And with that, Titan and Dabur have also reported their operational numbers. How have these companies really performed? Well, my colleague Vinny joins in with more details. Take it away, Vinny.
Absolutely, and let's talk about Dabur first. Now, in terms of when you're highlighting in terms of the demand, urban and rural demand, the company said that they have seen an improvement coming in over there. Consolidated business is expected to grow by 10% in Q1. International business also has seen a strong performance, double-digit growth even in the international business in constant currency terms. The healthcare and the personal care business, that's the HPC business, that has also seen a double-digit growth in terms of value, backed by a mid-single-digit volume growth in terms of volumes. So yes, strong growth that is seen in healthcare as well as the HPC segment. Now obviously the summer centric business where the beverages were included, that has seen a bit of a muted growth because of that unseasonal rain factor that has come into play over there. Badshah Masala, that continues to show strong momentum and has seen a growth in high teens, while gross margins and EBITDA margins are expected to see an improvement given that we're seeing a reduction in terms of the inflation. Now, when you look at what brokerages are highlighting, Morgan Stanley is maintaining an overweight rating given a target price of 606 rupees per share. They said that the improving demand trends and top line growth and gross margins is something that is working out well, while the management seems optimistic in terms of the outlook. Now, talking about the discretionary side, when we have Titan that reported its a strong growth in revenue of around 20% on a year-on-year basis, so better than what the street was expecting. All consumer businesses are exhibiting strong growth for the company. Segment-wise, jewelry saw 21% growth, watches saw double-digit 13% growth, eye care division saw 10% growth as well. Akshaya Tritiya wedding seasons were something that supported the growth despite the gold price volatility. So yes, overall Titan also saw strong growth, and in terms of that, Citi is maintaining a buy on Titan given a target price of 3 1,020 rupees per share. Q1 update was better than what the street was expecting. Growth journey is continuing for Titan and positive in terms of near-term outlook for Citi in terms of the growth prospect for Titan.
Right, and moving on then, it's raining IPOs, and IPO this year's have had a good run, and the most recent one has been Senco Gold. Now, Senco Gold has been subscribed more than 73 times on July 6th and the third and the last day of the bidding process. Now, if we look at the breakup of the IPO subscription, the QIBs have subscribed it 180 times, the NIIs have subscribed it 64.99 times, and the retail investors have subscribed it 15.46 times. And the listing, of course, is on the 14th of July. So that is when Senco Gold lists on the bourses.
All right, let's keep it with the primary market then, and let's talk about another IPO which will be listing today, and this IPO is the IdeaForge IPO. Now, let me take you through what the numbers look like, what the subscription figures for IdeaForge look like. The retail front saw a subscription of 126 times, the QIB saw 85 times, so over the subscription was oversubscribed by 107 times. Now the IPO details, let me take you through that. The issue size is of 567 crore rupees. IPO is priced at 672 rupees per share, and the fresh issue is worth 240 crore rupees. Let me take you through the names of anchor investors that have invested in IdeaForge. That's Nomura Funds, PineBridge Global Funds, Goldman Sachs Funds, as well as Tata AIG. And to give you a little bit gist of what the company does, it has a 50% market share in the India UAS market. It ranks 7th in dual-use category drone manufacturing, and Infosys also has a 4.35% stake in the company. 70% of the revenue for this company comes from the defense segment, and order book for the defense segment as of now is at 185 crore rupees. Let's look at the financials of the company then, a broad overview of that as well. For FY23, the revenue stood at 186 crore, EBITDA stood at 57 crore, PAT stood at 32 crore, and margins came in at 31%. When we talk about the valuation then, on the 12th month forward PE basis, you've got IdeaForge comes in at 28 times, MTAR Tech at 34 times, Data Patterns at 59 times, and Astra Microwave at 28 times. So these are all the players in the drone industry. And for the drone market overall, the triggers ahead will be that the Indian drone market is projected to grow at $812 million by FY27, and the exhibiting growth CAGR of 80% over FY22 to FY27.
All right, then IdeaForge listing on the bourses today, and hopefully a bumper listing it is going to be. Moving on then, Ravi Dharamshi, who is the CIO of ValueQuest Investment Advisors, shares his views as to where he sees HDFC Bank's growth headed post its merger with HDFC. He also shares his take on the overhang in the non-lending financials that is going away and how the manufacturing sector is faring in India. Let's listen in to what he had to say.
It cannot be anything but positive. Overall, we finally have a company, now more than one company is there, which can be a global leader. So I think over a longer term period, this behemoth will become a must own for most of the large global funds. So, and it is, I mean, I'm very glad this is a group that you can, hold at the highest in terms of corporate governance standard. So absolutely a draw for overall capital into India, and I think that's the beacon of Indian market. I mean, if India is going from $3.5 trillion to $5 trillion economy, a company like HDFC Bank can definitely grow. It is not beyond the realm of possibility to grow at 18%. And I think that is the beauty of Indian market, where the largest company can also grow its top line at between 15% and 18%, and the bottom line has a possibility to grow higher than 20% also. So there a lot more money is going to flow into financial products. So non-lending financial companies are at a very interesting juncture. And whether I say it's the insurance companies or the wealth managers or the capital market related plays, these are all still, suffering from the correction of the last 2 years or the last 3-4 years, where there were some regulatory kind of pressure on the company, or there was exceptional pressure on the yields, which was leading to the companies not performing. Now, some of the pressure is relieving, like we saw in the case of AMCs, that, okay, the regulator took a pragmatic view and decided to hold back and take the industry's feedback. So just like that, on the insurance front also, there was an overhang on the a particular company from promoters selling. They took back. So all those overhangs are now going away, which is leading to this space also suddenly becoming very, very attractive. So I would say within the financials, non-lending financials are probably at a slightly better risk reward at this juncture. No, we are not looking to reduce the exposure on the lending side, but we are definitely looking to increase the exposure on the non-lending side. So it is not a either or call for us. In fact, we are bullish on both the spaces.
All right, so that's the word coming in from Ravi Dharamshi. But with that, it's a wrap on this edition of Market Cafe. But don't go anywhere as the market takes all the action.